Hi, wealth builders. Happy Friday. Welcome to another Zobas Wealth Lab Live. And so today we are going to be talking with the end of the year coming. We are going to be talking about something that is pertaining to business owners. So we're going to be addressing how to leverage year-end strategies to slash your small business tax bill. We're tackling it because it's a critical financial checkpoint for those of us who run their own show. And so, year end tax optimization. If you run an LLC, a side hustle, or a full time business, you know the pain of paying self employment and income taxes. Unlike a W 2 employee, you have the power to strategically manage your income and expenses right now before December 31st. So you want to slash your tax bill. And we're going to try and turn that year end stress into a year end advantage. So let's talk about why year end is the entrepreneur's superpower. The rules are different. Most entrepreneurs operate on a cash basis, which gives immense leverage over the timing of transactions. So the primary goal in these final weeks of the year is simple: to reduce net income. And we're going to go through three core strategies designed specifically for business owners. So the first one is expense front loading and purchasing. And again, remember the goal as a small business owner is to optimize your tax situation. This is the most direct way to cut your tax bill. You want to spend to save. So for a cash basis business, expenses are deductible in the year they are paid. So if you have an expense and the vendor has sent you a bill for it that you haven't paid, the cash hasn't left your account. As a cash based business, you cannot deduct that expense from your taxes. But if you've paid for it, the cash has moved, you can deduct it in the month or in the year you've actually paid for it. So if you plan to buy something in January, buy it in December and get the deduction now. So that's the first thing. That's we're looking at pillar one, expense optimization. So top areas where you want to focus your spending, you want to prepay expenses. You can deduct up to 12 months of certain business expenses, like your insurance premiums. If you have liability insurance or equipment, if you pay rent, you can prepay rent for a month or two. If you subscribe to software, you can do an annual subscription for your software, whether it's your accounting software, your CRM, whatever it is. So prepay expenses. If you need to buy new equipment like a laptop, a monitor, a printer, buy it now because those are 100% deductible. And then retain professional services. So you can prepay for your lawyer, you can prepay your accounting services, yeah? You can prepay your consultants that you know you will need in January and February. So prepare expenses. Those are the top three areas to focus your spending on, preparing those expenses. Now make big purchases. If you want to make big purchases like vehicles or expensive equipment, remember that there is depreciation. In the year you've purchased them, you can do what they call a Section 179 deduction, and this allows you to deduct the full purchase price of the equipment you've bought. So whether it's a car, if it's a heavy machinery, you can deduct full purchase of the price under Section 179 deduction. There is also bonus depreciation. It will allow you to deduct a large percentage of the cost of the item you've bought. So it's also that applies if you've hit your limit for Section 179 deduction, you can get bonus depreciation. However, it has to happen in the year you've bought the equipment. So if you have a major business purchase planned for Q1 and you can afford to buy it this month, then go ahead and do it so you can capture the deduction this year. Okay. Second thing we want to talk about is maximizing self-employed retirement plan. This is where freelancers can save a fortune. W2 employees are capped by their company plan, but you have access to retirement options, which has massive contribution limits. And it's important that as a small business owner, you take advantage of that. So let's compare three heavy hitters. I am going to I'm going to share my screen here. We want to take a look at uh, SEP IRA, solo 401k, and a simple IRA. And again, the plan is just to be able to use the one that thoroughly maximizes deductions for you. So here, look this. All right. So we're taking a look at it. So under this plan, the SEP IRA, you can contribute up to 25% of your compensation with a max of 69,000. And a solo 401k, you can contribute 25% of compensation plus 23,000 for a max of 69. And this one for a simple IRA, your contribution limit is 16,000 or 19,500. And the deadlines you want to set this up. Now, this has a deadline of December 31st. This is October 1st. It's too late for this year, but you have a solo 401k, and if you don't have an IRA, you want to set it up. It also happens to be the easiest to set up and fund. It's a great choice for those of us that have fluctuating income. And so that is definitely something to consider. That's the SEP IRA, easiest and quickest to fund. The critical deadline to note is for the 401k. You want to establish it by December 31st. You want to make a contribution, even though contributions can be made later, establish it this year. So if you don't have a plan yet, consult your CPA and look into an SEP IRA, which is easier to set up quickly. And so the last thing we'll talk about this evening is the power of timing when it comes to your income and expenses. If you're tax planning as a small business owner, you want to keep in mind two things: when you send your invoices and when you pay your bills. Remember, I mentioned earlier that as a cash based business, the actual expense you can deduct is not when you've received the bill, but when cash has moved out of your account. And so you can accelerate expenses, pay every outstanding bill before the new year if you can, pay your vendors, pay your subcontractors, pay for your annual software subscription. Every dollar paid is a dollar closer to a deduction this year. Now, you can also defer your income if you expect to be in a lower tax bracket next year. Delay sending certain invoices until January 1st. You don't recognize the income until it's received. And if you have clients who pay on time, send your invoice in January so that that revenue or income counts for 2026 and not for 2025. So delaying a large invoice by a week or two can push that taxable income into next year. And then mileage, do a final review of your business mileage log, calculate your home office deduction, what method you want to use for that. And these are common deductions that get overlooked until the last minute, but you want to start planning for it now, especially your home office. You want to start gathering expenses and receipts and documentation. Even if you're not sure if you can deduct it, gather those receipts and documentation so that you can send it off to your CPA or your tax accountant that can help you make that determination. And here are a few bonus items for your checklist. Check your estimated tax payments. You do pay enough in quarterly estimated taxes. If not, pay a safe harbor amount now to avoid or minimize underpayment penalties, right? If you have a HSA, this is a triple tax advantage holy grail. Max it out. And then clean up your books. Use December to reconcile your bank accounts, your payments, categorize your transactions, prepare your reports, finalize everything you need, because a clean book saves you billable hours when it comes to filing your taxes. What your CPA will charge you, it reduces the amount of time they have to spend cleaning up your stuff, which saves you money in the long run. And so we've gone through three things that will help you maximize your expenses and just leverage year-end tax strategies to help you with your deductions. And so there is the one question that I get asked all the time that I want to make sure I answer on here. I run my business from a home office and use my personal cell phone for both work and personal calls. What is the key documentation I need to have in place before year end to defend a deduction for my home office and those dual use expenses if the IRS ever asks. So that's a common thing that happens. And the key to defending these deductions is proving exclusivity, regularity, and accurate allocation of the business portion. What do I mean by that? Documentation is required. Your floor plan measurement of your home office, a sketch or diagram showing the exact square footage of the area used exclusively for business. Have photo evidence, have utility bills and receipts for things like your mortgage, your property taxes, your homeowner's insurance, utilities, etc. etc. All right, so make sure you have documentation. And if it's things that you use for both business and personal, allocation policies, a reasonable estimate of business use percentage. For example, saying 75% of cell phone use is for client calls and business communication. If there's ever an audit and they look at your cell phone bills, is that provable? You want to have call logs. I have a separate bank and credit card for your business. I preach that all the time. While it's not strictly required to prove the percentage, paying the entire bill for your space from your business account and then recording the personal portion as owner's draw is the cleanest way to document the expense initially. So make sure you perform an audit of your logs and bills before December 1st and document your allocation percentages in records. Okay. So we've gone through year-end tax strategies or blueprints for freelancers and for small business owners. Hopes it helps you as you are preparing for the end of the year. Thank you once again for joining Zabas Wealth Lab for another edition of Creating Wealth Fearlessly. Go forward, be well in all that you do.